In this episode, Jacques will focus on the potential Zambian maize export market over the next 12 months and the impact it could have on price direction. I will also look at the latest price movements in the livestock industry of Zambia. All in this episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this African Agri Overview. Make sure to follow us on YouTube, where we will share regular insights into the agricultural markets of Africa. In the latest economic news, the kwacha weakened significantly against the US dollar since the start of September last year, but has recently started to gain some strength with the latest exchange rate currently on 18.95 kwachas per US dollar. The exchange rate has a significant effect on the price of agricultural commodities in Zambia and also impacts the demand for these commodities as a result. The latest Brent crude oil price increased the past 3 weeks and traded on $85 per barrel, which was underpinned by signs of tighter global oil supplies and an industry report that pointed to another decline in US crude inventories. As mentioned, the kwacha to the US dollar exchange rate largely determines the demand for beef and cattle as well, from the DRC especially, and with the recent strengthening in the kwacha, we might see slightly lower demand as it is becoming more expensive for the DRC to import beef at the moment. The latest choice grade live price traded on 34 kwachas per kilogram, which translates to approximately 62 kwachas per kilogram dressed weight. Standard grade prices traded on 27 kwachas per kilogram, while commercial grade carcass prices traded on 38 kwachas per kilogram. Poultry prices came under pressure due to high stock levels and lower demand over the last 2 months and, of course, lower prices in the DRC. The day-old broiler price decreased to 10.67 kwachas per head, while day-old layers traded low on 12.67 kwachas per head. I think we can see slightly higher prices as demand is likely to improve. However, the stronger exchange rate can result in slightly lower prices than expected. Layer cull prices, however, remained on a higher level on 58.67 kwachas per head, while live broilers traded higher on 76 kwachas per head. The average egg price decreased to 47 kwachas per tray due to lower demand and higher production over the last month or so. We are expecting prices to increase as we head towards August due to higher expected demand and lower production. Mutton prices traded between 50 and 60 kwachas the past week, with lamb prices currently on 110 kwachas per head. Goat prices came in at 50 kwachas per kilogram, while the average bacon price traded on 48 kwachas per kilogram. In the grain markets, the latest maize price traded on $250 per metric ton, soybeans decreased to $400 per metric ton, the wheat price stayed on $570, while the soy meal price decreased to $450 per metric ton. Jacques will now focus on the potential Zambian maize export market over the next 12 months, so make sure to stay tuned.
Thank you, Johnny. In this session, we will look at the potential Zambian maize export market next 12 months and the impact it could have on price direction. However, before that, a quick summary of commodity price movement in the past month. Maize price lower in US dollar terms, but sideways in kwacha terms. Kwacha 8% weaker during this month, the main reason for the lower USD maize price. Soybean price down $100 per ton or 20%, reasons being the move from old to new crop, plus the market anticipating a large new crop and carryover stock in excess of 100,000 tons. Wheat price sideways, almost zero tradable local stock left, market waiting in anticipation for the government to gazette the statutory instrument which will lift the 15% import duty from outside SADC and the 5% surcharge. This should see prices decline around $50 per ton. As indicated above, our focus subject this week, the Zambian maize export picture next 12 months. The large carry-in stocks into the 2022-23 year of 1.1 million tons, which was mainly the FRA strategic reserve, has almost been depleted despite the respectable size 2022-23 crop. The main reason for this was record export volumes as indicated in the table. We estimate 1.3 million tons. Zambia had a healthy exportable surplus around August-September last year after the crop harvest. However, both formal and informal exports were well above expectations during Q3 and Q4 2022 due to extremely attractive prices in neighbouring Tanzania whittled down the surplus. We estimate as much as 550,000 tons or 42% of total exports could have flowed to Tanzania. The next table indicates the export parity calculation to Tanzania for December 2022. Given transport of around $100 a ton, a $90 ton potential margin was achievable, which is substantial, and one can understand the urge to export and the risk informal exporters, smugglers, were prepared to take. Early January, the government stopped issuing export permits, i.e. stopped formal exports and called in the help of the army to curtail informal exports. However, by then the majority of the exportable surplus had left the country. We understand it is in particular informal export to Tanzania that was completely underestimated. The FRA maize was also exported, which made sense given the large strategic reserve. However, it seems control over FRA maize exports lacked, and substantial volumes were exported without going through the correct administrative channels. When the government stopped issuing export permits early January, they probably realized they had much less stock compared to what official export numbers indicated, despite buying a further 300,000 tons during 2022-23. We estimate Zambia will carry around 200,000 tons into the 2023-24 season, as indicated in the table. Most of it will be FRA stock. Crop expectations for the 2023-24 season, the current season, 2.8 to 3 million tons versus annual consumption of around 2.3 million tons. With government normally targeting a 500,000 ton strategic reserve, it is unlikely they will issue export permits during the next 12 months. However, general market view import demand from Zimbabwe, Tanzania, Malawi and the DRC will continue, in particular during half 1 2024, and government will struggle to curb informal exports chasing attractive prices across porous borders. Kenya should also have an indirect impact as they are likely to attract Tanzania maize, which could see Tanzania turn to Zambia to fill their potential deficit. However, supply and demand forces could keep 2023-24 exports below 500,000 tons. How will all of this impact price trends? The Central Eastern and Southeastern African region is likely to experience another year of relatively tight maize balance sheet and normal to above normal price levels. There will be export demand for Zambian maize. Observers predict the new Zambia crop to harvest from maize should trade at $230 to $250 per ton during the main harvest season of June and August, and higher from there. Price expectations during harvest season between the yellow lines are relatively high when compared to history. Circles on the graph indicate historic harvest time price levels. The 2019-2020 crop year was an exception due to a small drought-affected crop. The 2022-23 year was another outlier driven by export demand to neighbouring countries, and 2023-24 could be similar. In conclusion, we do not expect the Zambian government will issue export permits during the next 12 months, which will prevent formal exports. Tight maize balance sheets in the neighbouring countries will stimulate higher prices, and the Zambian government will probably struggle to prevent informal exports following lucrative margins. This is likely to support Zambia prices in general, and we expect an above normal price range from October 2023 to March 2024 between the brown lines. But the lack of formal exports could deter a price spike significantly above the indicated range. Thank you.
For more information, please make sure to contact us. I'm Dr. Johnny van der Merwe, and thank you for watching.